Saving money when you have a low income can be challenging, but it's still possible with the right strategies and discipline. The Low Income Savings Challenge is designed to help individuals and families with limited financial resources build savings gradually. Like a straight shot of whiskey, we at the Wallet Kit are going to provide a simple, straightforward illustration of how this challenge works. 1. Set realistic goals. Begin by setting achievable savings goals that align with your income and financial situation. These goals can be small, such as saving $10 per week or $50 per month. Let's say your goal is to save $50 per month. 2. Create a lean budget. Analyze your monthly income and expenses to create a minimalistic budget that covers essential needs like housing, utilities, groceries, transportation, and minimum debt payments. For instance, let's say your monthly income is $1,500 and your essential expenses total $1,200. 3. Identify areas to trim. Review your budget for non-essential expenses that can be reduced or eliminated. These could include dining out, entertainment, subscription services, or impulse purchases. By cutting back on dining out and canceling unnecessary subscriptions, you could possibly free up an additional $100 per month or more. 4. Automate savings. Automatically set up a specific amount of money to be transferred from your checking account to a designated savings account. This ensures that your savings goal is a priority and that the money is saved before you have a chance to spend it. Schedule an automatic transfer of $50 from your checking account to your savings account at the beginning of each month. 5. Track expenses closely, monitor your spending meticulously to stay within your budget, and avoid overspending in discretionary categories. Use a budgeting app or spreadsheet to track every expense and ensure that you stick to your budget. 6. Participate in no-spend challenges. Occasionally, challenge yourself to a no-spend week or month, during which you limit spending to only essential items and necessities. During a no-spend week, avoid eating out, shopping for non-essential items, and any other discretionary spending. 7. Leverage windfalls. Whenever you receive unexpected money, like a tax refund, bonus, or cash gifts, allocate a portion of it to your savings. Example: if you receive a $200 tax refund, consider putting $50 into your savings. 8. Embrace the incremental approach. Recognize that saving a small amount regularly can add up over time. Don't be discouraged by the size of your savings contributions. Example, saving $50 per month may not seem like much, but it amounts to $600 over a year, which can cover unexpected expenses or contribute to an emergency fund. 9. Adjust goals as income grows. As your income increases or your financial situation improves, consider gradually increasing your savings goals to accelerate your progress. For instance, if your income increases by $100 per month, you can allocate some or all of this additional income to savings. 10. Celebrate milestones. Acknowledge and celebrate your savings achievements, whether it's for consistently committing to your budget or reaching a specific savings milestone. Example: when you reach your $50 per month savings goal for 3 consecutive months, treat yourself to a small, budget-friendly celebration. The Low Income Savings Challenge is about making the most of your financial resources and gradually building a savings cushion, no matter your income level. By setting realistic goals, creating a lean budget, and making intentional financial choices, you can develop a strong savings habit and improve your financial resilience over time.